Welcome back. Well, I tell you one thing, it's the selling is getting accentuated in the European markets. Just look at the FTSE, it's down 3%. Now, it's a big index. You're worried about 2% fall in the Nifty. The FTSE is down about 3%. The German market is down about 3%. The third biggest market in the world is down 3%. So obviously there's an issue. We didn't have, of course, Nikkei, which was closed today. CAC is down about almost 3%. So the European markets are down 3% at this point in time. And look at the Dow futures are down 522 points at this point in time. For those of you who follow S&P futures, I hope my rate is right, which is saying it's down about 1.1%. But that's the dollar index as well, 93.26. So there's a risk off, absolutely no doubt about it. Globally, there's a bit of a risk off, which is on, and now the bank Nifty is back to the low point of the day, 620 points gone. On that, the Nifty is approaching 11,250 now, 242 points gone on that. Ashwani and Mitessh back with us for BTST calls. Ashwani, this is now some heavy duty selling that we are seeing. So how to approach the index now, and what would be your calls?
See, I told you that 11,300 is getting taken out. This sort of sell-off does not happen without a reason. The advice is, you never know how serious something is till the markets hit you with it. This is a 2-day-old news that COVID has reared its head up, and who is saying that the situation there is serious. So move to the sidelines even if you don't want to get short, because if you start to see those 300, 500 point gap downs again, all your profit plus your capital will be gone. We are very close to intermediate lows. This 90% cannot happen without a reason. Having said that, on individual stocks, Motherson Sumi is a sell with a stop of 117, target of 103. Tata Steel is a sell with a stop of 380, target of 365. And TCS is a buy with a stop of 2440, target of 2510. All these global facing type stocks, they could get into trouble. And again, you get back to, at some point, the work from home type stocks and stay away from the commodity type of stocks, and that should probably serve you well. But this is a serious sell-off.
It is a serious sell-off. By the way, look at Indiabulls Housing. Now it's down 15% and it's on temporary freeze. It will be interesting to see if that freeze opens before the markets close today. But for now, that's down about 15%. Mitessh, what are you trading?
Yeah. Anush, two more sell calls. Federal Bank sell with a stop at 51.5, targets of 47 here, and STBT and Chola Fin keep a stop at 234.5, look for targets of 225.
Ashwani and Mitessh, thanks for those calls. Let's do one thing. Let's get some feedback from the dealing rooms. Time now for our brand new segment, D Street Chatter. Dimesh has been working phones, I'm sure. Dimesh, let's today focus only on the market. What's been the feedback today?
Hi, Anuj. So, clearly the sell-off is led by global risk off. So that's been the first part. But clearly the feedback from the dealing room is that this is not largely institutional led. In fact, the selling seems to be largely on the HNIs and retail category, and there seems to be unwinding or booking their profits as well. So that's the key message coming in, that you probably will not see a very large FISL figure or a DISL figure, so to speak. So that's a clear feedback. And even from that HNI category, there's been a lot of froth in the mid cap and small cap. So that's clearly unwinding now, and you're seeing that mid cap and small caps are under pressure today, and largely underperforming the large cap stocks. So that's clearly visible. Banks continue to be under pressure, and there it looks like there is fresh shorting happening now. And even in the defensives, there has been a bit of a profit there for people to make. So there's clearly profit booking in the defensive side as well. So one, not much of selling from the larger institutions. It's largely HNIs and retail driven. And B, there is clearly unwinding now on the long side in the defensives, and there is fresh shorting in the bank Nifty side.
Okay, Nimesh, thanks a lot for that. Since we're talking about the global selling pressure, what better than to get you one of the biggest global guests that we can ever get onto a mega cnbc TV 18 exclusive. Shireen spoke with global investor and author Ruchi Sharma, who says expectations in India on stimulus are far too unrealistic.
This is a country that consistently disappoints the optimists and the pessimists. And the reason I said that was that most of the time, India tends to rank somewhere smack in the middle as far as these rules are concerned. And if you look at these 4 rules as well, India is like all over the place. But on the composite score of the 25 largest developing countries or emerging markets in the world, India ranks at around 13, so which is again smack in the middle. But specifically, of course, there are some strengths. Yeah. I talk about the fact that in an era of deglobalization, India ranks higher for 2 reasons. One, that in an era of deglobalization, the size of the domestic market matters a lot, and India obviously has a very large domestic market. And secondly, that the very few countries that are able to power their way through this difficult period of deglobalization are those nations that have some inherent export strength. Now, I know there's a lot of export pessimism in India, but having said that, what our data shows is that India's share in global exports and India's share in global capital flows has in fact increased somewhat in the last 3 to 4 years. Not as dramatically as countries like Vietnam, let's say, which is emerging as the next East Asian economic miracle, but still India's share has increased somewhat over the last 3 to 4 years. So that's one positive. So therefore, on that score of deglobalization, where you look at the domestic strength and if there is any export prowess at all, India ranks relatively well. But on the other scores, unfortunately, India's ranking slips quite a bit.
Yes, so on the domestic strength, we come in at number 6. So that's what Richard was pointing out is an advantage as far as India is concerned. But Richard, you know, in the context of where things currently stand with the Indian economy and the need for perhaps the government to stimulate more, offer more by way of stimulus, what does the data tell you, you know, in terms of debt to GDP and in terms of the government's ability to be able to spend more?
Well, this is where I think we spoke about this last time as well, that I think that the expectations in India in terms of what we can do with the stimulus are far too unrealistic, because we tend to always compare ourselves to the developed countries and look at the size of their stimulus and want to do something similar. And what I point out repeatedly in my book is that you have to get your comparisons correct. We are still a developing country. Our per capita income is still below $5,000. And if you look at most countries in that cohort, they have not been able to enact such large stimulus plans because they're constrained by either having a very large public debt, which is a very large government, or because their inflation and currency are vulnerable to any large-scale printing of money that the developed countries such as the United States or even UK are able to do. So therefore, I think it is a disadvantage for India that we went into this crisis with such a high level of public debt and such a high level of fiscal deficit. But having said that, what the government's been able to do on the stimulus front, I think is pretty much a very realistic assessment. The problem was before the pandemic in terms of what the starting point was. After the pandemic, what the government's done, I think that it's pretty much a very realistic assessment.
It's a realistic assessment. Going back to the earlier point, Richard, you know, about the strength of the domestic market as well as our export prowess, in the context of the global trend towards deglobalization, stroke self-reliance, how do you see India being able to benefit from this China plus one strategy? I mean, what's the argument and the thesis there? Because you brought up names like Vietnam, which clearly have emerged as the big beneficiaries.
Right. So as I said, that India has emerged as a marginal beneficiary, and not to the same extent as Vietnam, but its share has gone up in global exports and global foreign direct investment. So that is a silver lining to that playbook. For the Indian economy to ever achieve those growth rates of 7, 8, 9% over the coming decade on a sustainable basis is going to be extremely difficult. The benchmarks of economic success have changed. And of course, the more we talk about self-reliance, you can argue that's a realistic strategy, the more difficult it is going to be for the economy to grow much above 5%. So if I were to hazard my best guess as far as what India's growth rate is going to be over the coming few years, I doubt very much if on a sustainable basis, we are going to be able to exceed 5%.
Okay, that was Ruchi Sharma. Well, the market is still status quo. Advanced decline is now 1:6. Just pull out India VIX once. Volatility today has picked up 10% higher on the India VIX at 22.14. Of course, it had fallen seriously over the last few days. Today it's crossing the 50-day moving average as well. 22.2 on the India VIX is what we have. Will be interesting to see if it actually makes a move towards the 200-day moving average, which is somewhere around 27. But the Bank Nifty is now in serious danger of even breaking 2300. Forget about 21,000. Forget about 22,000, which has been spoken about as support ad nauseum. But as of now, 21,480 is what we have. And this index, in fact, is one which is now trading below all its major moving averages. As of now, it's even below the 100-day moving average. We'll take a break, and of course, we'll come back with the last 14 minutes of market.